Good morning from our world headquarters in New York. I'm Manus Cranny.
And from our studios in London, I'm Danny Berger. Welcome to Bloomberg Brief. Let's set your agenda.
Civilian deaths escalate as the conflict in the Middle East enters its fourth day. Israeli Prime Minister Benjamin Netanyahu warns retaliation has only started as Hamas threatens to kill hostages. Treasuries roar higher in the best day since March, driven by dovish messaging from the Fed.
Higher term premiums result in higher term interest rates for the same setting of the Fed funds rate, all else equal. Thus, if term premiums rise, they could do some of the work of cooling the economy for us, leaving less need for additional monetary policy tightening to achieve the FOMC's objectives.
And China weighs a new round of stimulus to meet the growth target as country garden ramps up the warnings it's set for its first ever default. Two words that overcame the geopolitical angst that ravaged everybody yesterday was proceed carefully from the Fed. You've just heard Laurie Logan and, of course, Jefferson used the language, the vice chair at the Fed. Proceed carefully. So there is this building clack at the Fed, from Mary Daly to Logan to Jefferson, about the ability that the market is already doing in the bond market. Danny, you'll show those in a moment. For the stock market, the transfer is the yields rolled down by 18 basis points. They're queuing up. In moments of grave existential angst, they are piling into treasuries, piling into dollar assets. Equities are higher. Energy component of the market was up yesterday, the most in 6 months. Aerospace and defense, the biggest ramp higher since 2020, and the European market up 1.5%. Louis Vuitton will deliver their numbers later tonight. But the narrative that shifted in the past hour was the stimulus narrative from China, and that was a shotgun marriage to this kind of rollover in yields. As yields rolled over, the stimulus narrative from China, they've done incremental moves so far, but this is barreling through with size at $137 billion of stimulus. Danny, good morning.
Good morning, Manus. When it comes to this bond market, here's what you were talking about. 15 basis points lower in the 10-year yields. We're lower by 10 basis points across the entirety of the curve, the best day since March. Odds of a Fed hike have halved since Friday. It's because you have a hawk like Laurie Logan talking a whole lot like a dove. Westpac, though, for their part, Manus, says that it's too soon to say we're at a turning point in this Treasury market. You need economic data backing that narrative, and we do not have that yet. Elsewhere, you're completely right. It is China's stimulus that's dominating this market. What yesterday was a trade based on fear, was a trade based on war and havens, has now turned into that stimulus trade. Brent crude, it did lose steam this morning. It was heading for losses. That turned around on that Bloomberg scoop around China. We're now slightly higher, hanging on to those big gains from yesterday. The Bloomberg dollar spot, Manus, that was also gaining to start the morning. You can see that also lost momentum on the China story. Of course, the risk within all of this, and it would be so like the 2020s for this to happen, that just as the market is settling into this idea that we're at the end of the rate hike cycle, you get a warning like we did an hour ago from the IMF, Manus, warning of tenacious inflation that is really going to be toying with this economy at least until 2025.
It's such a rich word, isn't it? Tenacious inflation, stubborn inflation. And they go on to talk about growth, but they also talk about the unemployment rate. And this is critically important for the Fed here. The unemployment rate they see by the end of next year in the United States at only 4%. Well, I say only 4%, but at 4%, but that is down from over 5.2% when they put out their projections in April. So this builds the soft landing. But I think we both concurred on Andrew Bremer at NAT Alliance yesterday when we were chatting on IB. The script has changed in terms of the propensity for hikes. So, Danny, that's where we come down. We'll debate that with our guests through the morning. But the escalation in the conflict between Israel and Hamas has entered its fourth day, with at least 1,500 deaths reported. The Israeli Prime Minister Benjamin Netanyahu says the response against Hamas has only started. That is, the Palestinian military group says its allies are ready to join the fight.
I know
that we all want immediate results. It will take time, but I promise you, dear Israeli citizens, at the end of this campaign, all of our enemies will know that it was a grave mistake to attack Israel. What we will do to our enemies in the coming days will reverberate with them for generations. Our allies are ready to join the fight if Gaza is subjected to a war of annihilation. They will not sit with their hands tied. The The government of Israel knows they will open the gates of hell if they try to destroy Gaza and to use non-traditional weapons to destroy Gaza, like American weapons.
We have global team coverage with our reporters from around the world. Bloomberg Middle East anchor Yusuf Gamal-Din is here covering the hostage situation. Patrick Sykes on Iran, and Bloomberg Europe correspondent Maria Tadeo on the EU leaders' response. Yusuf, let's start with you. Let's start with the situation on the ground and the hostages. What do we know so far?
Well, the violence shows no signs of abating, and the rhetoric is escalating. You heard the commentary from the spokesperson of Hamas saying they're willing to kill hostages. The operation is still very much underway, so the Israeli Defense Force is operational by land and air as well as sea around the Gaza Strip. The casualty figure at the moment at 900 Israelis, mostly civilians. Nearly 700 Palestinians have so far been killed in retaliatory strikes. I was catching up with Ryan Bowen. He ran me through what could come next. This is going to be a block-to-block fight on the ground because the objective is to take down Hamas. And meanwhile, we heard from the Iranian leadership in the last hour as well. They continue to insist they have nothing to do with this.
And that is the big issue for us to debate. It's a potential expansion or retaliatory action, or how much does Israel blame Iran for this? But that will evolve. Yusuf, from the organizations involved in business in Israel, Chevron has also an Israeli field. What is the impact in terms of the gas prices, the gas markets?
Yeah, so this started to unfold in the last 24 hours. We saw a huge move to the upside in some of the European natural gas contracts, but that story extends into today. We're up once again to levels that we haven't seen in about 6 months. The field that Chevron operates, which is the Tamar field, is actually quite a large field in that it is around 6 wells. They produce 7.1 million to 8.5 million cubic meters a day. The plan for Israel was to become a major regional gas exporter. So the Egyptians are already raising the red flag here and saying we have a drop in imports from Israel in our energy mix. So that is going to be a real point of pressure for the Egyptians and, of course, for the natural gas markets globally at a time when everybody is on edge.
Yeah, we have Bob McNally in the next few minutes. Looking forward to discussing just that with him, Yusuf. Thank you so much for joining us. That's Yusuf Gamal-Din. Now, Patrick Sykes joins us from Istanbul. Patrick, what's the latest on the role that Iran is having on this conflict? Yusuf was just talking about it, how this escalation could really turn on that very fact.
Yeah, Yusuf mentioned the rising rhetoric there, and just in the last past hour, we've had Iran's Supreme Leader Ali Khamenei repeating that denial from Iran that we had earlier in the week that they weren't involved in this operation, but also expressing support for it. And I think, interestingly, similarly to the Hamas clip we heard at the beginning, warning Israel that mass casualties, what they call mass killing, massacres in Gaza, will only prompt what he called a calamity on Israel itself. So the warnings are piling up, warnings from the US for Iran not to get involved, warnings from Hamas and Iran for Israel not to perform massacres in Gaza, and warnings from Israel that they're going to take revenge for the weekend's events.
Yeah, the rhetoric is heating up on all sides. Patrick, thank you very much. Bloomberg's Patrick Sykes in Istanbul. Let's get to our European correspondent, Maria Tadeo. She joins us now. Maria, the EU foreign leaders, they meet today. What can we expect an outcome, a statement? What do you think is on the table today?
Well, Manis, yes, they meet today in Brussels. Top of the agenda is to really establish coordination among European countries on a number of issues. And if you look at what happened yesterday, that very chaotic, almost shambolic communications coming out of the European Commission over whether or not funding to Palestine would continue, it does suggest that they seriously need to sit down and coordinate their approach. Remember, the European Commission has announced it will now put under review the money that it sends to Palestine for a number of measures, humanitarian, but also if you look at issues like development in the area, although it does say and makes it very clear that no payments have been suspended, and also states that humanitarian aid will probably be separate and will continue regardless. Beyond that, there's also, as you said at the start of the hour, the conversation around the hostage situation. Remember, the European Union has said they feared, unfortunately, that there are European citizens that were kidnapped on the Saturday morning, and they have an obligation not just to track where their citizens are, but also to try to find a way, if possible, to bring them back to safety in their respective countries.
Maria, thank you very much. That's Bloomberg's Maria Tadeo. All right, let's get to now some other top stories, that are trending on the terminal this morning. And Delta, United, and American Airlines are halting flights to Tel Aviv. Multiple airlines across Europe and Asia have also suspended services to Israel. That includes Lufthansa, Air France KLM, Cathay Pacific, and Air India. The FAA is also advising airlines to expect delays and exercise caution before resuming operations. Manis.
Well, Danny, the workers at GM's Canadian plants are on strike after wage talks failed. Unifor, the union representing more than 4,000 GM employees, is trying to get the automaker to match a deal signed with Ford that includes wage increases, cost of living allowances, and pension improvements. And U.S. police shot dead a person who crashed their car into China's consulate in San Francisco yesterday. China is calling for an investigation into the crash. The incident comes ahead of President Xi Jinping's visit to the Californian city for a key summit next month.
Now, coming up next, as I mentioned, Manis, we're going to be catching up with Bob McNally, founder and president of Rapidan Energy Group. This is Bloomberg.
This is Bloomberg Brief. I'm Manis Krenny in New York, Danny Berger in London. Danny, we've got to reflect on the 2 days in the oil market, the biggest bump higher in 6 months. That was yesterday, up 4%. But the market, remains tight, and that is the view out there. The wild card is Iran and what happens to an escalation. I want to show you the 2 days relative to 7 days, because last week we gave back $10. So even though the market rallied by more than 4% yesterday, we have still not managed to undo last week's brutal slump in the market. We are, of course, joined now by Bob McNally, founder and president of Rapidan Energy Group. Bob, we're looking at the oil market. We're on tender hooks. It's the first flashpoint with the dollar. We are obviously watching every twist and turn about the escalation risk towards Iran. Great interview done yesterday by the surveillance team. This was Ron Dermer, who said there's some evidence Iran knew beforehand, but the question is what happens, or how does this escalate, Bob, and what is your estimate of a retaliatory move by Israel on Iran?
Good morning, Manis and Danny. The road to an oil crisis leads through Iran. Right now, our odds are about 20%, but with risk skewed sharply higher, that this will affect oil in a material way. So we think the market is probably appropriately discounted that risk at this point. So far, Iran is saying we didn't do it. The U.S. is saying we have no evidence Iran was directly involved. And even while Ron Dermer, in your excellent interview yesterday, suggested there's some intelligence pointing to Iranian complicity, or at least foreknowledge, they haven't concluded that yet. Secondarily, you got to watch Lebanon and Hezbollah, because other than a formal accusation of Iranian complicity, it's an expansion of the conflict in Lebanon is how this thing could spread into the region and become a major oil and LNG issue. And so far,
right. I mean,
the
Bob,
fighting between...
if I can just jump in here, because when you look at some of the restraint from Israel, as I believe you were going to say, some of the restraint maybe when it comes to fighting Hezbollah, some of the restraint in their language around Iran, the U.S. too, does it seem like this is a country that's very reticent to involve Iran? Do you see that as unlikely because of the rhetoric they have been using?
That's right. I think they are focused. Israel's focused on Gaza right now. They are deterring. They're mobilizing 300,000 troops. They're going to deter Iran, deter Syria. That's also the signal from the U.S. military. One war at a time. And I think all efforts are focused on now on liquidating Hamas's ability to do this again in Gaza. And they prefer not for it not to expand. The question is, as we move to the Gaza invasion phase, will Hezbollah stay out of it?
Bob, you say the market has appropriately priced the situation. I'm just going to double check prices at the moment. So you say we're at fair value for geopolitical risk, but what is my risk if this expands in different directions? What are the near-term touch points on the upside?
Yeah, so any sign that this was going to spread to involve Iran and therefore threaten Gulf transit routes, energy facilities, 40% of crude exports, 18% of refined product exports, Ras Laffan, liquid, the LNG, et cetera, I think we would be measuring the increments in oil in the $5 level. So we would be $10, $15, $20 higher. Were the market to, and were we to increase our odds of a disruption risk beyond the, say, 20% where we're at right now. And for that, the vectors for that would be Lebanon, formal accusation of Iran. Those are the two things to watch for higher, risk premium.
Yeah, Bob, I wanted to step in here because, okay, so we've priced, at least for now, we've priced in correctly the geopolitical risk, assuming we don't get what you were just talking about. Have we correctly priced in at this moment additional Chinese stimulus? A great scoop from the Bloomberg team of at least $137 billion in additional debt. Do prices need to move higher now?
We're still in the supportive camp. We're still bullish. We were, that was a big, you just mentioned the big pullback last week before all this. We have some horrific, weird gasoline data in the United States we're trying to figure out. And the macro headwinds are high. But you know what? When we look at the balances, we still see a big deficit in this quarter, the fourth quarter, well above 1 million barrels a day. We think China is not as bad as everyone says. Demand is good. Import pull is good for crude, for SPR stock filling. We're constructive crude fundamentally. We probably would have been buying this dip anyway. But on the other hand, we haven't had the big stock draws we expected to see in the third quarter so far. The U.S. gasoline is falling off a cliff, so there are some bearish flags we need to be cognizant of.
Bob, let's square it off with your political hat, your time at the White House. Is the Saudi-Israel deal in the deep freeze, or is it like binned completely? And secondly, and more importantly, does the White House now come down much harder on sanctions on Iran, and that is the supply tail risk for the oil market?
Yeah, delayed. I think the Saudi-Israeli normalization is delayed, not necessarily binned, as you said. Saudi Arabia, this is an Iran project. Hamas is an Iran proxy. Hezbollah is an Iran proxy. Now, Saudi Arabia won't be able to do deals with Israel while Israel is completing the mission in Gaza. And the Israeli government is not going to be interested in making concessions to the Palestinians. So you got to hit pause. But after this is all done, I think there'll even be a stronger rationale for Saudi Arabia to want to normalize with Israel. Biden, a lot of clients saying, oh, Biden's going to go tougher on Iran exports, et cetera. I don't think he's going to be in a hurry to do that. Why? Remember, part of this drug deal between Iran and the United States, which was $6 billion in ransom money for 6 hostages. The quiet deal was Iran would freeze its nuclear enrichment in return for the U.S. basically allowing Iran to export all it could to China, Syria, and Venezuela. So if President Biden cracks down on Iranian oil exports, there's a risk Iran could restart its nuclear program. I don't think he's going to be in a hurry to do that, Manus.
Bob, thank you very much for joining us this morning, setting the tone. We're at the money for geopolitical risk. Bob McNally of Rapidan Energy, his views on the market. Quick check on yields as we saw a pile into U.S. Treasuries. Futures were open yesterday. A lot of the dramatic move was made then. But we are seeing yields roll down. 465 on 10-year Treasuries, a pip higher on 10-year German bonds at 278. Good morning from New York. Welcome back to Bloomberg Brief. I'm Manus Cranny in New York.
And I'm Danny Berger in London. Here's what you need to know. Civilian deaths escalate as the conflict in the Middle East enters its 4th day. Israeli Prime Minister Benjamin Netanyahu warns retaliation has only started as Hamas threatens to kill hostages. Treasuries roar higher in the best day since March. That was driven by dovish Fed messaging from Lori Logan and Jefferson. And China weighs a new round of stimulus to meet its growth targets as Country Garden ramps up warnings it's set for its first ever default. Manus, it is this spat of relief in this bond market, this belief that finally we are here, finally we are at the dovish pivot. Westpac, for its part, doesn't buy it, says that we need backing from economic data, and we haven't gotten that yet. The market doesn't care, though. We heard from Lori Logan, who is generally considered a hawk, saying that the market has done the work for us. 10-year yields come in by nearly 15 basis point. 465 is where we stand on the 10-year yield across the curve, lower by about 10 basis points. Brent crude and the dollar, Manus, we had talked about this just moments ago with Sofia Orta-Acosta, that they'd been moving on China's stimulus prospects. It seems the market has pulled back from that, curbed its enthusiasm. Brent crude has reversed into more losses. It's down just barely, though, and we're looking at a Bloomberg dollar spot that is still slightly weaker, down 0.1% on that picture. So again, Manus, some of what was the China stimulus trade has kind of retrenched and gone back into all the excitement over this bond market.
Yeah, it's interesting. Between 9 a.m. and 10 a.m. or 4 a.m. and 5 a.m., we saw that China stimulus headline, and it boosted the equity market. Take a look at what's going on, and you have the two words that moved the risk dial yesterday, which was proceed carefully in the midst of all the geopolitical angst in regards to Israel-Hamas and where that would go to. You are seeing stock futures higher this morning. Lori Logan, again, reaffirming the job. The market has done a great deal of our job for us. Energy markets rose the most in 6 months in the U.S. Aerospace and defense up the most since 2020. So you are just seeing that momentum rise. And just on the yield, as those yields rolled down and people ran into the dollar, somebody switched on the vacuum yesterday, which sucked money into equities, sucked money into the dollar, and sucked money into treasuries. And with that in mind, the script has changed. Those are the words of Nat Alliance. In other words, the propensity for rate hikes is very much dissipated. Tech stocks up 0.1%. This is the best day in a month for Europe, I should add, Danny. We get Louis Vuitton a little bit later on tonight. Pepsi out tonight in the US. So Europe is trying to sort of take itself higher at the moment. We're going into the depths of this earnings season. Big luxury, big focus tonight, Danny. But of course, the conversation around oil that we just had with Rapidan Energy, Bob McNally says we are at fair value for the geopolitical state of play at the moment, and he only assigns a 20% probability to a major escalation towards Iran at this juncture.
Yeah, and he talked about what we've heard so far in terms of the rhetoric coming from both Israel and from the U.S., the attacking so far really being concentrated in Gaza, all of that resulting in restraint that it doesn't seem like so far they will involve Iran. The wild card on his point, Manus, does seem to be what happens with Hezbollah, what happens to the north of Israel that threatens invoking the whole of the Levant region.
Yes, and if they come into play, then the gas and the oil markets go into not just a multi-week, but a multi-month level of convexity or let's say, concern. Danny.
Right, and that's been a huge part of what's moved this bond market, yes. That safety trade after it closed yesterday, but also it's the dovish Fed speak. Let's talk about all of that with Geoff Yu, joining us now, Senior Market Strategist at BNY Mellon. Geoff, great to see you.
Thank you.
Great to have you in the studio. Look, yesterday you have two Fed speakers, but most notably perhaps Lori Logan, who's viewed as a hawk, saying the market's done the job for us. Is this the dovish pivot? Are we there? Are we at a peak for this Treasury market?
So I think, like you could tell towards the end of last week, there was slight concern around the lines of, oh dear, if this goes on, something's going to break, right? And I think the Fed already was bearing that in mind. They were looking at that comprehensive tightening and financial conditions. You add that, the risk aversion that you've seen over the last few days also onto that, and I guess they certainly are leaning in that direction. Early days, we can't believe that there's been a pivot in the space of 2 or 3 days, but I think from pricing, you can tell that the market is doing its job. Right.
Geoff, good to see you this morning. They have been wrong on transitory, wrong on pretty much everything, and they are behind the curve. That's the accusation. What goes through my mind when we ran through stocks and bonds, etc., somebody just literally ripped a lawnmower on yesterday, which was sucking money into dollars, whether it was equities, FX or bonds. That vacuum cleaner went monstrously live for me yesterday. How did you look at yesterday's dollar action across the markets?
Well, when you have risk aversion, sometimes you really need to balance things out, right? So on the one hand, dollar is strengthening, you want to move into that, but on the other hand, especially when oil prices are involved, you're almost forced into treasuries, you're almost sucked into treasuries, to use the phrase that you used, but at the same time, you're worried that there could be upside risks to inflation expectations as well, given the move in energy prices. So it's almost a kind of a forced push, so to speak. But back to your point about being wrong, I think you'd rather be wrong to the upside when inflation's going up rather than over-tighten and then force through a swift economic contraction and disinflation or deflation, which is pretty hard to get out of. So I think that could be the pivot that the Fed's thinking about too.
I wonder then what you make of Nomura saying this rate hiking cycle is over, but they'll do one more just for insurance purposes. Is that realistic at all that they do one just to be sure that they've got it under control?
We don't think that's necessary in the US, right? So things are under control. And even if, let's say, a third or half of the FOMC members had that in mind, like you said, like the last few days, the market seems to have done that job. So, of course, they're always going to be data dependent. You can't take anything off the table. But I think the next question is, and besides, even if there is a hike, what marginal difference is it going to make? It's about where rates are going to go for next year. How many cuts are going to be factored in? We think very limited potential at this point, but the market may want to push for a bit more.
Yeah, but the market says 3 to 4 cuts for next year, Geoff. So you push back against that. And I mean, again,
Indeed.
This ties into the higher for longer narrative. So what are you penciling? If the market's 3 bid at 4, what have you got?
Right, so I think if we are done right now, at least for the first half of the year, personally, I still think it's very difficult to actually squeeze any in. So that leaves scope for perhaps maybe 2 at most in the second half of the year, if not one more. But going back to where we are right now, in one word, labour. Labour markets, wage growth, yes, it is contained, but it's still running at, let's just say, above where the Fed finds it comfortable. And in particular, as the Bernanke paper pointed out, labour markets can actually tighten or wage expectations can move higher exceptionally when, let's say, energy prices, supply factors are de-anchored as well. So this is still quite a pivotal moment, and they need to reinforce that high for longer message.
Speaking on that, I mean, you talk about energy prices. We're in the middle of this unknowingness when it comes to the conflict of Israel. We're just speaking with Bob McNally, saying that he assigns about a 20% risk that Iran gets involved, that there is this kind of supply shock that comes from that. Does that sound about right for you, that the tail risk is somewhere around 20%, that this escalates?
Well, we're not assigning any firm probabilities, but clearly that's the tail risk the markets are looking at right now. And you saw that in the move in oil prices. I guess, one offset factor is that the demand is not there. Yes, energy markets, oil in particular, it's often a supply-driven story. You can support prices for an extended period of time compared to other commodities. But if demand isn't there, then in terms of the volumes that are going to be in the market, then the sellers, they're going to face some headwinds as well. One new wild card, as you've just reported last hour, if Chinese demand actually starts to pick up, then we may need to adjust our probabilities as well. But it's early days, yeah.
So, Geoff, let's get to the Asian markets. We have stimulus, under $140 billion. They've tinkered with triple R. They've trifled with some other sort of small rate cuts. Here we are, traditional stimulus. Your first take, is it a decisive step? Does it change the trajectory or the narrative on growth?
Right. No, and no, because it's just far too late. Right. It should have happened probably around March, when that was the best opportunity to send a decisive signal to the market. There's going to be a plus 3.5% budget deficit for the year. They're going to support growth. And clearly, in hindsight, the economy wasn't strong enough to rebound from COVID and the lockdowns organically. Is this a down payment, though? Is this a first step? I'm less interested in the size. I'm interested in how it's going to feed through in the market and transmission. Because if the PBOC can somehow monetize this in the secondary market, right, then bringing back QE, China start on the table, there are many ways they can do this, then that could be a bit of a game changer. So it's less about the size, because, to be frank, I don't think the size is enough, right? It's smaller than the stimulus that they had in 2019, but how it's funded, how it's transmitted, that could make a far bigger difference.
Is this not a shift, though, even if it's too little, too late? Isn't this a shift in just pure ideology of the type of stimulus that China is willing to hand down?
Yes, I do think so. But on the other hand, the other shift markets were potentially looking for, maybe not in the most positive way economically, is, OK, are they just not going to be focused on the growth targets anymore? But here, I think it's a sign that they actually still, when they say there is a growth target or a growth range, they want to stick to, at least they want to hit the bottom side of that. And clearly, the trajectory, especially after the New Year holiday, the Golden Week holidays, they're looking at spending numbers probably not where they thought it would be. So a final year-end push is absolutely necessary. Yeah.
I mean, it's good to hear somebody with such utter conviction, but no. And it's not about the size, it's about the quality. So then, do I ignore this as a risk factor for me putting on more risk? Do I just go, I need more?
No, absolutely. I think it is a risk factor insofar as the downside in terms of China's economy. That is already in the price. All the risk to China and the associated APAC trades absolutely to the upside right now, especially with the new news. But again, the question is, how is it transmitted? Is this something in the short term, we get like a year-end Santa rally, or is it something more sustainable where we can get, let's just say, 4.5% to 5% growth or even higher over the next 2 to 3 years, with longer-term targets in mind? I think that is going to be the next focus, especially for long-term asset allocators. To be frank, looking at iFlow custodial data, they're not just underinvested in China, they're underinvested in EM full stop. So can this change things? Let's wait and see.
Are we allowed to talk about a Santa rally? We haven't even had Halloween yet, Geoff.
Oh dear. Well,
comes earlier every year, the Santa rally.
I think any rally will take right now.
Yeah. Very good point. Geoff Yu, thank you so much for joining us of BNY Mellon. Now, coming up, the U.S. says security assistance for Israel is on the way. We're going to discuss that next on Bloomberg.
I also made a request, direct request to President Xi, that the foreign ministry strengthen their statement on the Middle East, which didn't even mention the loss of the horrible, gut-wrenching loss of civilian life. I'm gratified the foreign ministry issued a new statement that did condemn the loss of civilian life.
That was Senate Majority Leader Chuck Schumer on his meeting with President Xi. Joining us now to discuss is Bloomberg Senior Editor Bill Ferries. Bill, we've had the U.S. with saying that aid is on the way for Israel. So we have this short-term measure, but what sort of pressure is this White House facing to do something longer term to sustain aid?
Well, apparently, you're right. There is some military aid on the way. The president has the authority to dispatch that aid. But in terms of a bigger package and something that might be longer term, that will take congressional approval. What some members of Congress have proposed to the White House that they consider is combining a military aid for Israel with military aid for Ukraine. That would help many in both the Republican and Democratic Party who want to continue supporting Ukraine, while also while providing the aid that almost everyone in the U.S. Congress would like to provide to Israel. It kind of gets over that hurdle of a small group of mostly Republicans who are increasingly opposed to the Ukraine aid. The White House so far, according to our reporting, doesn't think that that kind of a measure is necessary at the moment. But as we'll see as the politics play out in the coming days and coming weeks, especially with the House still in its leadership fight, that might be something the White House has to take up more seriously.
Well, let's just talk about that 4%, because this was part of McCarthy's narrative yesterday. He stressed that he had the support of 96% of the House Republicans, and it was wrong that 4% of the GOP worked with Democrats to remove him. McCarthy, back in play, potentially, for speakership. How real is that risk?
Well, it does suggest that maybe Republicans are not unifying around any candidate. The fact that the McCarthy is still kind of out there and front and center and weighing in on this. He looked like the speaker today talking about how weak the U.S., he says, would have looked if we were in the middle of a government shutdown while watching this war take place over in Israel. So, the Republicans are due to meet, I think, later today. They're due to have some kind of a vote on Wednesday. But they have to really be unified if they're going to go to the floor of the House and say, this is our candidate. We remember what happened to McCarthy. It took 15 rounds for him to finally get the vote to become Speaker, and that was only after some of his members voted present. So there's probably still quite a fight ahead in terms of who's going to lead the House.
The dynamic, though, has changed, Bill, given what we've seen unfolding over the weekend. And again, the pressure to have support for Israel. Does that make it more likely that Republican lawmakers can coalesce around a candidate?
I think it does amp the pressure on all sides in this. I don't know if it amps it up to the point where one side decides to, pull up the white flag and surrender and say, that's all right, we'll go with your guy instead. That's not something, compromise is not something that we have seen, particularly the far-right fringe of the Republican Party in the House, be able to do. So that's going to be a heavy ask, and I think the pressure will need to be higher before you see something like that happen.
The pressure for assistance, Bill, just to square this off, just to give some figures, the U.S. has given $44 billion to Ukraine. It gives $3 billion every year to Israel. Do you think this is one of those moments when there is a clarion call for America really to show its global position and step forward with a unified funding for those nations that are in the U.S.'s interest?
I think you're going to see very kind of foreign policy focused Republicans and Democrats making that kind of an argument. But I think you'll also see the opposite. We saw Senator Josh Hawley today say whatever aid we still have approved and haven't sent to Ukraine needs to be immediately diverted to Israel. So I think there's going to be a counter argument to that narrative.
Okay.
Bill, thank you very much for that. That is Bill Ferries. And tune into our interview with National Security Council spokesman John Kirby. That's at 8:30 a.m. Eastern. Now, coming up, we're going to look at some of the market-moving events to watch throughout the day. But let me leave you with a check on this market as U.S. futures continue to move higher, up 0.1%. Dollar moves lower as U.S. 10-year yields continue to fall 13 basis points. TD Trading says the floor for the 10-year yield is at 4.5%, so we do not have much longer to go from here. New York crude down 0.25%. This is Bloomberg. This is Bloomberg Brief. I'm Danny Berger in London alongside Manish Krani in New York. Now let's get you set up for your trading day with a quick look at what's ahead for the next 24 hours. We're going to have Fed Speak continuing. Raphael Bostic, Christopher Waller, Neil Kashkari, and Mary Daly due to speak at separate events. And Treasury Secretary Janet Yellen will also deliver remarks in Morocco later today. Caroline Ellison, the star witness against FTX co-founder Sam Bankman-Fried, is due to take the stand at the fraud trial as soon as today. Her highly anticipated testimony will be pivotal in the case. And Birkenstock is set to make a final decision on pricing its IPO later today ahead of its trading debut on the New York Stock Exchange tomorrow. So, Manis, that's what's happening in the wider space. Of course, we've got some pretty big earnings that are going to hit the tape today, too.
We have indeed. Louis Vuitton is going to hit in Europe. Europe having one of its best days that we've seen for a number of weeks. But Louis Vuitton, of course, the consumption of champagne, they told us, they warned last week that nightclub demand is doing well, but at-home consumption is down. And within that, there is a general sense of revenge pleasure of 2021 and 2022. Maybe we're running just short of that. But fashion and leather is expected to come in at 10.3 billion. Let's see what they say about China, because that's going to be critically important. And then, of course, Bloomberg Intelligence have run the numbers. Whatever Louis Vuitton does and Kering does, that's got a huge impact for, guess what, Danny? Ferrari. I've only been close to a Ferrari. I've actually been driven around in a Ferrari by one of my banker friends as opposed to owning one. Danny, good morning.
Manis, you can't drive a Ferrari in New York.
That was actually 30 years ago. That dude had a
potholes.
Ferrari 30 years ago. That just shows you what he was earning then. Go figure.
Huh. Okay. Yeah. Why not? I mean, a good friend to have. You should probably keep him around. Manis, We're also going to be getting PepsiCo's volume, sales, and consumption trends are going to be looked for very closely. All right, should we make a bet? What are the chances they mention Ozempic? I'm going to say 100% odds they mention it.
It's sort of like it's like a caveat. It gets everybody out of jail, doesn't it? In terms of, you know, we're having a tough time. Maybe they'll actually have to cut prices. I mean, here's a radical thought. Ozempic causes demand destruction, which ultimately forces them to cut prices, which reduces inflation, which stymies the Fed. There you go. Just extrapolation on the fly.
Wow. Can you imagine that? Inflation is brought down thanks to Ozempic. It's not just curing the world of diabetes, it's also curing the world
I am very
of
tongue-in-cheek.
inflation, too.
I am tongue-in-cheek, because we both know that the Fed focus on core inflation. Core.
Yeah. And I'm also focused on my core, too, just as it relates to Pepsi and all things unhealthy. But, Manis, I did just want to mention, you know, these consumer stocks had their worst week last week because you had Walmart warning about Ozempic, because you had the CEO of the company that owns Pringles also warning about Ozempic. This is something that has led to value destruction in these stocks.
No, look, absolutely. And on a slightly more serious note, it will have an impact. We are going through some societal changes in terms of the use of these drugs, the expansion of these drugs, but the pricing of those drugs is critically important. Should we close off with a bit of FX? Because I think we didn't actually get there. Have a look at dollar yen. I mean, and this is I think the fly in the ointment. The Bank of Japan is considering lifting its full year 2023 forecast to 3% from 2.5%. Now that, Danny, can have implications for YCC. By the way, that was from Kyoto at the Bank of Japan.
Yeah, and look, it's a debate we've been having long. Does the Bank of Japan move this month? Does it move later? Either way, that's going to have huge implications for this Treasury market if we get that vacuum of investors bringing money back home into this Japanese market.
OK, well, that's it for Bloomberg Brief. Surveillance is ahead with the team. They've got the National Security Council spokesman John Kirby joining them at 8:30 a.m. Eastern, right here on Bloomberg. From London and New York, good morning.